So when we, if I go back to when we started off, our key thesis was that insurance doesn't come naturally to people. They have to be told that they need to buy an insurance policy, and hence intent creation is sort of the single most valuable part of the insurance distribution chain. So we believe that if we are able to create tools and technology that empowers advisors who create the intent and also help the consumer make a decision on buying policy, there is value to be created, which is what we've gone about building. Totalmin is a triadic platform. It has three-sided ecosystem, one for the advisor who are digital partners on the platform, second for insurance companies, and the third for policy holders. So we are a tech-first distribution platform. We'll continue to build tech. There is also a switch towards AI we are seeing, and there are significant efficiencies that we can see in building out the business. So we will continue to invest and continue to build the core tech in Totalmin. Right, if you see the way the business has evolved and the Totalmin platform has evolved, it has become the go-to platform for insurance distribution in the B30 markets. Now, by B30, I mean beyond the top 30 cities. These B30 markets have traditionally not had access to the last mile insurance distribution, and through the POSP digital partner network that we have created, we are bridging that last mile gap. Now, B30 markets today are very low penetrated. Overall, India as a country itself has a low penetration in insurance. Within that, B30 is very low penetrated. If you look at the Red Sea report in the last 5 years, B30 markets have accelerated after significant awareness that has been created, and also rapid digitization has led to B30 markets growing at a much faster rate. Within the B30, the POSP ecosystem has done very well, and Totalmin has a key presence there. So structurally, B30 markets will grow. Within that, Totalmin-led POSP model will continue to grow, and that is going to be a significant driver for our growth going forward in the ecosystem. Also, there is a national mission of insurance for all by 2047. So in the next 22, 23 years, as the country gets developed, insurance for all will become a key part of that the developmental agenda, and then within that, Totalmin will have a key role to play, is what we believe, and that's something that we are very, very excited about. Right. So our key strengths or the key modes of the business is the last mile granular network that we have, and also like earlier mentioned, the tech that we have built. So as the digitization develops in the country, the products become more digitized and they get accessible and they get available onto the platform. So this shift towards digitization, actually it is post-COVID shift towards digitization in the country, has led to significant tailwinds for the ecosystem, including for Totalmin. So it will just enable more friction-free distribution of insurance products in the country. So at the core, we are an insurance platform. We now have a relationship with the policyholder through the POSP. Now this policyholder increasingly is looking at other services, other products that they could get through the single window, which is the POSP. And in fact, we started seeing a lot of demand coming for investment advices. And because we are investment led platform, we decided to add mutual fund as a part of the offering. The idea is to the same policyholder, we give other advisors for investment using right kind of products that are made available through SKU addition on the platform. So distribution exists, last mile presence exists in the 19,000 plus pin codes. So it is as simple as adding more products and driving more distribution through the same network. But today, from a revenue business point of view, that is majorly an insurance distribution platform. So if you look at our business, right, it's a platform business, and that platform has been built out. So in the last 2 to 3 years, while the scale has gone up, the platform building expenses have not gone up, and hence it provides significant operating leverage to the business. As a fixed cost as a share of the total revenue has dropped from 42% to 22%. Our service EBITDA is a key measure of our profitability, and that is a KPI that we drive. That is improved from -12% to +11% in the last 2 to 3 years. And that improvement sort of translates directly into the EBITDA, which is why you see it moving from -200 to -200 to close to 100. And that has been a significant improvement, largely driven by scale, but also driven by platform efficiencies. And that trajectory is something that we see will play out as we keep building the business. It's a large market. Opportunity is significantly huge. The platform has been built. So we see a great sort of opportunity to continue to build at large scale, this platform is designed for very high scale. So it can go 20x from where it is today without having to do any incremental expense on the platform.